Good morning. This is Joe. Ask Joe about money. And it is February 9th, 2023, 9:26 a.m. A couple minutes before the market open here. And we're going to do our normal process like we do every single morning. We're going to start out by looking at the overnight range in the ES, micro E-mini futures contract. So the overnight range, that was the high. Or I should say that was the low, and this was the high. Okay, so we have a range between 41.26 and 41.70. That's about 40 points. It's a decent sized range, but what was the range in relation to yesterday's price action? So yesterday was a downtrending day, and so we immediately this must have been a news candle here, but we basically retraced the entire move down here. So that's just something for us to note and be aware of. Nothing necessarily that we're going to do with that information, but remember, every morning we're just looking at observing what the market is doing, what it has done, and just taking all that information in, and that's going to assist us in making decisions. So here we are, and that's the overnight range. And let's switch our chart to, that was a 24-hour chart. Now we're going to switch it to regular trading session, so we could look at the gap, and then we're going to look at the 60-minute chart, and let's just, so we could get context of what's going on here. All right, so let's see what's going on here. Now, again, look at my charts. If you look, my charts are hard to read because I have all of my personal trades and I have all of my personal notes here. What you don't see is indicators, okay? What you don't see is indicators, because I'm going to look at pure price action, and that's going to alert me to what's going on and how to read the market. So again, we're still at this inflection point that I've been talking about here. The market will eventually resolve itself with a move in one direction or another. That's not predictive in nature, but what it is that, you know, we have this kind of a triangle forming here. So we basically, at this point, so again, to just kind of reiterate the longer picture story of the market, we have, higher highs, higher lows, higher highs and higher lows. We got up to this resistance area that I've been talking about for quite some time, and now we're at this point we're consolidating. There's a lot of energy being built up here. This was, we originally came back up here. It was February 2nd, so we're working here for a while up in this zone. And so now we have to see what's going to happen here, because, we pushed up. There were no buyers up here, right? And how do I know that? Because it rejected, right? So it came back down, but then there were no sellers. This is at support. So then the market came back up, okay? But notice it did not make a new high. Back down to support, okay? And, now we're in a situation where, okay, well, what's going to happen here? Because we're at support. Okay, we're at support, but are we going to have enough energy to make this the next leg up, or are we going to break down here? So we're in a tight spot. Here's the market opening up here today. So we closed at 41.30. We opened up 41.65. It's about a 35 point gap up. And notice we're gapping up into resistance, right? We're gapping up into resistance. So this is getting tighter and tighter, right? This is getting tighter and tighter. So do we think the market is going to stay in this box here forever? I don't. So then that means is that, what are we looking for? Well, we're going to see what the market does, but in general context, this is where we are. So in order for me to get long, we're at resistance here. This is generally resistance. So if you're going to get long here, what are you looking for? Move up to here? Because until we break out here, I'm going to assume that we're going to fail here. So for me, it would be nice if a short setup, we could take a short down to support. And that's just a move from here to here. So that would be a trade I would be interested in. But of course, we're going to look at the 5-minute chart and see what the market is telling us, because I don't just short here because we're at resistance. I'm going to let the market tell me, say, you know what? We're at resistance. And now price action is confirming we're at resistance. So again, this is not predictive. This is not something where I'm biased on whether I want to take a long or a short. But if I'm going to take a long up here, it's got to be really convinced, because on the flip side of it, if we start getting some big green candles, this could be the launching point of a breakout to the upside. So I'm not against that, but I just the clearer move would be a close of the gap to the downside. But that doesn't mean anything. That just means that those are two possibilities. Either one could happen, and we're going to see. So now let's go ahead and let's switch to the 5-minute chart, and let's take a look at what we have going on there. So here we are. There's yesterday's close. There is the high of the overnight session. Okay. Let me move these boxes out of the way. That was when I was framing yesterday's trades that we did together live. And so now, what I like to just keep on my screens, just to really zone in, is so this was yesterday's price action. And here we are today. Here's the moving average. We're opening well above the moving average. So, in order for me to buy and to go long, if I'm buying well above the moving average, I need extraordinarily good green bars, right? Because the average price is here. And for me to buy up here, so far, it, there's no buying. But again, this is the open. And again, we use the open as a temperature gauge to see what the market is doing. What's the enthusiasm in the market? Are there buyers? Are there sellers? Right? What are we looking at here? So, as you know, that there's a lot of time, waiting time. There's a lot of time for us to just wait and not do anything, and that is what a professional trader does. So one of the things I was thinking about is that I'm always reading stuff. I'm always learning new things, and a lot of it's on trading psychology. So what I wanted to do this morning in the time between, because there's not much for me to talk about, because we've just framed the market, we're aware of what's going on, and now it's just a question of, all right, well, let's go to our mindset, because I talk more about mindset than trading setups, because what makes us money is our mindset. And this morning I wanted to share a book. I actually just started reading this book, and this book is by Jared Tendler, and it's called The Mental Game of Trading. Jared Tendler, The Mental Game of Trading. Jared Tendler was a aspiring golfer. He was supposed to go pro, and he got injured. And then he turned his golfing performance mindset into a coaching business. So he started coaching golfers, and then he started coaching poker players at the highest level, and now he coaches traders. And just the title of his book, The Mental Game of Trading, right? Trading is a game, okay? Trading is a game. And if we could look at it, so there's two components. We have the trading game of what we're doing right now. So we have the nuts and bolts of trading of what we just did, looking at the charts and the experience of the market, and that's a game, right? And then we have the mental game, but they're both games, right? So that's really interesting and really important, because I know for myself, for a long time, I didn't look at it as a game. And I took it very personally. And when you look at something as a game, just as if you would be a golfer, just as if you would be a poker player, if you would be a tennis player, then all of a sudden, so the first bar was a red bar, okay, down bar. So again, that's for me, just by the virtue of that bar, it's going to be hard for me to look long, at least initially, because red bar and way above the moving average. So if I'm buying way above the moving average, I'm going to need a way above average green bar. And so now that they've put that first red bar in, it's just making more of the bear case. But again, we are opening up, so we have to be aware there's going to be a lot of support down here. But we'll see what happens. It all depends on how this develops. And yesterday was yesterday we moved down and then we consolidated here in this range. So let's see. So far, a very muted open. So we'll see what happens. So in his book of The Mental Game of Trading, it's very interesting because the first thing that he talks about is emotions. Emotions. Did you ever have a negative emotion? Did you ever have an emotion that made you feel angry? Did you ever have an emotion that made you feel upset? And I think this is so important. It's so important. We look at emotions, I mean, I know I have, and it seems like our society looks at emotions as a negative thing. So what do? We have a bad emotion. We go blow off steam, right? We have a bad emotion. We avoid maybe that thing, right? But emotions are like a warning sign, I should say. If you're driving your car and the gas light goes on, do you get upset that the gas light goes on because now you don't have gas and you have to stop and get gas? No, you use it as a warning sign. You say, hey, in the next, 10 or 20 miles, I'm going to go and get some gas. That's simply what it is. There's no emotional attachment to it. In the same way, when you feel an emotion as it applies to trading, that's telling you something. That's telling you something that, well, why? Why? There's something going on there. There's something going on underneath that emotion. Is it, and that's where the self-discovery, I can't tell you what that is because we're all different. But just a simple shift from looking at an emotion instead of kind of pushing it away, and I did that for many years because it feels crummy, right? It doesn't feel nice. But what if you looked at an emotion and you said, you know what? Why am I having this emotion? Is my risk off? Do I not like trading this market? Am I in the wrong time frame, right? So the emotions tell us stuff. So if we're able to use that emotion and utilize it to reflect, can you imagine what you could do? Because now you could go, and this isn't about stopping your emotions or changing your emotions. This is just about listening to your emotions. Listening to your emotions. So you have a bad emotion. And I know one of the things I used to do is, when I would have an unfavorable result in the market, I would just close my computer and just storm out and sometimes not come back to trading for weeks, right? Because I didn't want to feel that. But that's not the right approach because during those times, there are learning lessons. Okay, there are learning lessons. Okay, here's the second bar. So now we have two consecutive red bars. This bar made a higher or lower high. So let's see what happens. We're 2 bars in. Let's see what happens. So again, this is not about controlling emotions. This is about being aware of emotions. Okay, being aware, and we're all different. This is the process of self-discovery that makes trading so hard. But what I'm going to tell you is that if you want to be a successful trader, that's what you need to focus on. Okay, I don't know of any successful traders that haven't gone through this process, and it's not easy. It's not easy because we want the positive emotions. We want the reinforcement that we're good and we're doing a good job and so on and so forth. But the market is not about that. The market doesn't care about that. Okay, so emotions. The takeaway here is that if you're feeling an emotion, instead of suppressing it, as far as I can tell, I mean, at least I'm not able to suppress the emotion, right? Because a lot of times you hear, well, try to control your emotions. Yeah, but if they're happening, how do you control your emotions? So the strategy, according to Jared, and I utilize this in my trading, is that note the emotion, be aware of the emotion, and be curious and say, I wonder why this is coming up. I wonder why. Imagine operating from that frame of mind, because from that frame of mind, there is no good and bad. It's just, well, this is just what's happening. I'm experiencing this emotion at the moment, and maybe initially you don't know why. That's okay, right? It's all about the questions that we ask, because if you just simply hold the question, I wonder why I'm going through this emotion, that's much better. Follow me here. That's much better than just blowing off steam and ignoring it and making believe it didn't happen, because just holding the question, again, it's not about knowing immediately. It's about holding the question of inquiring and being curious. Why? Why? Why am I going through this emotion? Why am I acting this way? Why am I feeling this way? Well, I don't know why it is for you, and a lot of times I don't know why it is for me. But what I can tell you is holding that question, okay, holding that question is what brings you to discovery. It brings you to closer to what's happening and what you're doing and how you're doing it, okay? He also talks about, in his book, your A game, your B game, and your C game. He talks about A game, B game, and C game. So let's talk about that. We've all experienced the A game, okay? So we've talked about the A game, and this is where we're in, maybe you could call it the zone, okay? And it's something where it's just, we're not thinking much while we're trading. We know what to do. We know when to do it. We know how to do it. And it's almost something where we can't even explain it. It just seems very intuitive. Athletes talk about this a lot. But any type of performance sport, because trading is a performance sport, and that A game, okay, in that A game, okay, that is where we always strive to be, and sometimes it's not easy to get there. But in that A game, that's where we are not being controlled by our emotions in any way, right? So in that A game is, and I actually was talking to a colleague, a trading buddy last night, and we were talking about this. So when you're in your A game, there are no mistakes, right? Because you could take a bad trade. You could do something that, looking back, you say, oh, I need to get better at that. But remember, when you're in your A game, you bring whatever skills that you have in that moment to the market, right? So whatever skills you have, whatever techniques you have, and if it's a technique issue, well, but if you didn't have that skill, it's not a mistake, because you still didn't possess that skill. So you're trading at the best of your ability in the A game, and that's the best that we could do, right? Because if you realize that you have a skill deficiency, that's a separate matter for you to work on when the market's closed. When the market's open, we want to be operating from our A game. And when you're operating from your A game, there are no mistakes, because we're doing the best that we can with the abilities that we have. We're not letting emotions take control. So now we have 3 bear bars in a row, right? So 3 bear bars in a row, still far above the moving average. So again, for me to take, because in my view, it's likely that we're going to have a bounce at some point here. So far, again, I'm not willing to go long, but I just, at this point, we have a lot of traffic here. So we have a lot of stuff going on here. And so, the bear bars aren't very big. And I just, I'm going to sit this out, because we could certainly bounce at any point. We could bounce here, we could bounce down here. I don't know, but let's see what the price action is, and we'll go from there. All right. So then we have our B game, how he describes our B game. And in this area, we have what he calls marginal mistakes. Okay. So this is how he defines it: a blend of weakness in your tactical decision making and mental or emotional flaws. A blend of weakness in your tactical decision making and mental or emotional flaws. Then we have our C game, and these are obvious mistakes, and your cause mental or emotional flaws caused your emotions to be too intense, or your energy was too low. So C game, obvious mistakes, mental or emotional flaws caused your emotions to be too intense, or your energy was too low. Now, so this is when we talk about mistakes. This is what are true mistakes, something where you do something and a second later, you know that it was a mistake. So when we talk about the C game, where we want to work on moving our C game forward, right? Because if we're being dictated by our emotions, either we have too high emotions or too low emotions, that's where we need to work. Because now, when we're in our C game, we are not performing at our highest level by definition, right? Because now we're letting something else get in the way, which is our emotions, right? Which is our emotions. And so, this is really important because, we want to be on our A game, but yet when we're on our C game, are we taking the time to investigate why we're on our C game? Are we taking the time to figure out why our emotions hijacking our decision-making process? Are we taking that time? Because if we assume that there are no mistakes in the A game, they're just learning. Like we could make an error. We say, oh, wow, I really need to get a better technique on how to manage my stops. Okay, but that's not a mistake because as of that moment in time, you didn't have that technique. So you did the best that you could with the technique that you had. So that's not a mistake at all. That's just a learning mistake. But the obvious mistakes in the C game is I knew I should have done this, and maybe I've done the complete opposite, right? So, I mean, how detrimental to your trading would that be if you have all this knowledge, all this skill, all this technique, and you're doing the opposite of what you know is correct? I would say that's a problem. And that's what we have to focus, even though that's painful, even though we may not want to look there. The reality is that moving your C game forward to a C game, to a B game, to your A game, that is, and before even reading this book, I just started reading this book, and I've already been doing this without even knowing that I was doing this, is that, I'm analyzing my losing trades. I'm analyzing when I see my emotions are creeping in, and I'm trying to figure out, why. And the why, that part you're not going to read in a book. That part is you have to look in the mirror. You have to look at your trades. You have to look at your behaviors and say, why is that happening? Why is that happening? There is no cookie cutter answer for that. That's why trading is so hard. It's because that journey has to be done by you individually. Now, you could have trading mentors, and you could have a system, and you could have trading accountability partners. Sure, I have all those things. But at the end of the day, when I'm sitting alone and I'm meditating, that is where this stuff gets figured out. Because there is no cookie cutter strategy to help you figure this out. This is deep rooted stuff of who you are as a person, your belief system. And it's just like peeling back an onion. But what I can tell you is that it's possible. It's possible. It's doable. People have done it. I have done it. I continue to do it. I encourage you to keep looking there. All right, so now we had a green bar closing at its highs. This is a range-bound open so far. We do have, resistance up here. We have resistance from yesterday's high. This is the overnight high, the prior day's high. So to me, again, we'll see what happens. I'm willing to go long or short, but let's see what happens here. That's our range box at the moment. All right, so about 20 minutes into the open, what I'm going to try to do today, like I did yesterday, is that if we get a live trade on, I'll record it, and I'll show you live my thought process and how I managed that trade. We did that yesterday. I think we got a real good feedback from that, and it helps me a lot because it allows me to just speak what I'm thinking in terms of my thought process. And yesterday we had the trade. What was the trade yesterday? I'm trying to remember. Oh yeah, so yesterday the trade, we basically took this short here, basically a rejection up here, and then we ended up getting short as this candle was developing down, and so we were short from here. And then so this was our risk box up here. Yep, this was our risk box, and then we watched this whole develop here. Lower highs, lower highs, lower highs. We added some here, and then we ended up covering down here in this zone. So that was a good trade yesterday. That was the trade of the day. That was the only trade that I took yesterday. And so let's see what happens today. Let's wait till this candle closes, and then we'll wrap it up here. So again, at this point, it rejected. So it rejected up here. But again, I need to see conviction. This is not conviction. We're in a range right now, 41, 52 quarter, 66.75. So that's our range so far. Looks like this is accelerating down here. Let me check to see if we have any news today. I don't think we do. No news today. So we don't have any news, but here we are, about to close this bar. And so far, this is what we have. Muted open so far. Let's see what happens, and I'll catch you guys later.